Money is always eager and ready to work for those who are ready to employ it. Welcome to Simple Arithmetic Investing. Here we do proper analysis and evaluation of companies before investing in them. We take the guessing game out of investing. We do not gamble, we take calculated risks. In this video we will be analyzing Impala Platinum Limited, and we will look at its financial performance and determine its intrinsic value, also known as fair value, to see if it is worth buying its shares or not. Firstly, let's get an overview of the company. Impala Platinum Holdings Limited, or Implats, is a South African holding company that owns several companies which engages in mining, processing, refining, and marketing platinum group metals, PGMs, as well as nickel, copper, and cobalt. Its most significant mine is the Impala mine in the Northwest Province here in South Africa. Now let's look at the finances. Sources of revenue. Impala's revenue contribution by metals shows that Impala's 41% of revenue comes from the sale of platinum and 31% of its revenue comes from the sale of palladium. Metals that contributes to Impala's revenue are platinum, palladium, nickel, rhodium, and the remaining 2% comes from other metals such as copper and cobalt. Company's revenue. This graph shows the historical revenue of the company and also the estimates of what revenue might be in the future. The green bar shows revenue for the trailing 12 months including revenue in 2021. The yellow bars shows analyst estimates of future revenue, and historical revenue is shown in the blue bars. All of this information can be found on Yahoo Finance. Looking at revenue, we can see that revenue have been growing for the past years, and from our research we believe that revenue will continue growing since there are no indication that things might change in the business operations in the near future. Let's look at net income. In this chart we are looking at the company's profit, also referred to as net income. We can clearly see that profit have been growing steadily in the past, which indicates that the company has been doing well and able to increase its net income. From our intensive research, we believe it will continue growing for the next coming years. Now let's look at free cash flow. Free cash flow have also been growing for the past few years, which indicates that the company have cash to pay its debts, grow its operations, and/or pay dividends to its shareholders, which is a good thing. This is an indication that the company is not struggling financially. We have looked at the company's financial performance and we are satisfied. Now let's look at the company's intrinsic value, also referred to as fair value. This will help us see if the shares are overpriced, underpriced, or fairly priced. From our calculations we came up with a fair value of 29,601, which will be 296 rands per share. The current price is 18,294, which will be 182 rands. We can clearly see that currently the shares are underpriced, and that's what we want. The price should be at 296 rands, but it is currently at 182 rands. We can expect the value to grow from 182 rands to 296 rands in the future. This is a great buy. Thank you for watching this video up to this point. If you like this video, make sure you subscribe to our channel for more videos like this. Leave a comment in the comment section and tell us which company you want us to analyze in our next video. Thank you for watching. See you in the next video.